Hi everyone, let's go over my two micro Elliott Wave scenarios on Bitcoin and the impact they have on the higher time frame scenarios I have for you. So starting with the zigzag, which is a 5-3-5 wave structure, this still feels as an alternative scenario to me. I can't help it, and I wrote down a couple of reasons in the box over here. First of all, this wave C went all the way to the 1.618 trend-based fib extension, which is a rare target for a wave C, taken from the high to the low of A to the high of B, with the common targets being between the 1 and the 1.236. However, the 1.618 is a common target for wave 3 in an impulse, so that is something to keep in mind. Then secondly, this wave C went all the way to the 3.5 fib time, so basically comparing the time it took to develop wave A to the time it takes to develop wave C, it went all the way to the 3.5 fib time. So basically that means wave C is 3.5 times larger in time than wave A, which is also incredibly rare. Then yes, wave C tends to take longer than wave A, with wave A being usually a bit sharper and wave C being a bit more lazy, but I would be looking at around the 1 to the 1.618 area, which is over here. Maybe the 2 potentially, but the 3.5 is incredibly long for a potential wave C. Then we also have the wave 5 target of this wave C, because we then have a 1, 2, 3 sideways WXY in 4 and then a potential 5 to the downside, where then the most common target area for 5 is usually between the 1.236 and the 1.618, taken from the low of 3 to the high of 4. But as you can see, this most common target area, with the 1.618 then being the maximum target in the most common target area, this 1.618 is above the low of this wave X. And that's a little bit weird. If you have like a sideways correction in a wave 4 and the most common target area for 5 is not even above the price action of the wave 4. Yes, we wick below, but the target area most commonly for a 5 is not below this wave X. So that's a little bit odd. And then finally, if we look at the channel, then usually an ABC or most of the corrective structures follow channel-like structures, and this channel is then taken from the high over here to the high of B to then the low of A, and you would expect wave C to then be around the low of this channel in an equality. Like we look at equality in price and time, with then wave A being like this, then we have a wave B, and maybe wave C being a little bit longer, ending then around this area over here. But as you can see, price for multiple times went below the low of this channel, and eventually, yes, it did end in this wave C on the low of the channel, but of course it ended after 3.5 like the times the length of wave A in time. Preferably it would have ended already somewhere over here, but that is not the case. If we then go to the low time frame bullish scenario, which then the micro zigzag scenario is part of, because in this scenario you're then looking for a wave 1, sideways 2, and then another wave 1, and then an ABC in another wave 2, for then a continuation to the upside in a bigger wave 3, right? So you want to see a big push to the upside where volume is going along with price. However, on this time frame, this bullish scenario also to me is an alternative scenario, as mentioned in multiple videos, for again a couple of reasons. So we have this scenario over here feeling like an alternative as a zigzag, but also this one feeling as an alternative on the low time frame scenario, where this wave 1 is very difficult to count in a nice clean 5-wave structure. It is possible, but not nice at all. It counts much better as a 3-wave structure. Then the 1-2-1-2 diagonal, so we have a 1-2-1-2, has diverging trend lines, and by far most commonly you want to see converging trend lines, something like this. So that is not really supporting a very bullish move. Then if we look at the volume, if this is the beginning of a wave 3 to the upside, you preferably want to see volume starting to pick up, because a wave 3 is the biggest and strongest wave in an impulsive structure. But this move to the upside over here was lacking volume. You can see the average amount of volume over here was not very impressive, maybe even lower than the volume we had in this wave 2, which is a correction. So that's a little bit weird. Then this wave 2 bounced on the 886, which is a rare target for a wave 2. And if we then also again look at the fib time, this wave 2 was 3 times longer than wave 1. Yes, corrections can take longer than the impulse before the correction, but 3 times longer for a wave 2 is very, very weird. Like for a wave 4, yes, you know, can happen, but for a wave 2, this is actually very, very rare as well. If we then go to the impulsive scenario on the micro, this is currently, as it stands now, it feels better. So I guess that's then a preferred scenario, right? Where we're then looking for a wave 1, a wave 2, then a 1, 2, 3, 4, 5 wave scenario or count in a bigger wave 3. Then we have a corrective wave 4, expanding flat type of move, for then eventually more downside in a wave 5. Now this wave 3 then went all the way to the 1.618. I mean, these lows over here just missed out on hitting the 1.618, but wave 3 is at least not the shortest structure, so that is fine. Then we have this wave 4 over here with the fibs, the 0.5 and the 0.382 taken from the high of 2 to the low of this wave 3, where the 0.5 usually is a maximum target for a wave 4, and you don't want to see higher time frame candles like 15, 30, 1 hour candles closing above the 0.5. I now put the invalidation of this wave 4 at the low of this wave 1, because in an impulsive structure you don't want to see overlap between a wave 1 and a wave 4, so that's why the invalidation is at 27.5k. And the 382 and the 0.5 are also common targets for a wave 4, after which you then expect a move to the downside for a wave 5. And if we then look at the target area for a wave 5, this looks a little bit better than with the zigzag. So over here, a couple of target areas. First of all, the 1.236 and the 1.618 pulled from the low of 3 to the high of 4, which is over here between 26.4k and 26.2k. Then we have the 1-to-1, another target for a wave 5, pulled from the high to the low of 1 to then the current high of this wave 4, which is nicely in the middle of the most common target of wave 5. And another target for wave 5 is the 0.618, pulled from the high to the low of 3 to then the high of wave 4, which is just below this area, but that is actually quite fine. So interesting target area, also in confluence with the target box that I still have down here, which is untouched between 26.2k and 26.3k for a couple of interesting confluences that you can read over here. So we do have a little bit of support in this area, and this target box is right in the middle of the most common target area for this wave 5 as well. Then finally you see a channel, and actually channeling is very, very important in Elliott waves. I know I don't show channels too often because they make the chart look quite messy, but in this video I do like to show you the channels. So what I've done, and what is important to know, is that if you have an impulsive structure, you can pull a channel from the high of this wave 1, the beginning of 1, to the high of 2, to then the low of wave 1. Usually a wave 3 will go below the lower trend line of this channel. That is fine, but then once a wave 4 starts forming, a wave 4 tends to retrace to the high of the channel for then continuation to the downside. And over here you can see wave 4, as it stands now, got very close to hitting the high of this channel for then potentially a move to the downside, which is almost like textbook stuff in an impulsive structure. And if we then look at the target area for potential wave 5, you can also use a channel by putting the pivots of the channel on the high of 4 and the high of this wave 2, and then put the low of the channel on the low of this wave 1. So from 2 to 4 to the low of this wave 1, and then this area over here is going to be an interesting area for then potentially the low of this wave 5, which is, from a time perspective, Friday the 2nd, which is today, from 4 p.m. all the way till basically the weekend, let's say, the weekend over here. So that can be quite interesting for then this scenario. And if we quickly have a look at the bearish, I'm going ahead of myself, the CVD divergences over here, we still have, potentially interesting for this scenario, some bearish divergences, because price still here has a lower high on price, but clearly on the yellow line a higher high on the CVD, which is a bearish divergence where the target is this low over here. And if we then look more locally, over here, we haven't really been forming bullish divergences. I mean, you could argue that with this crazy wick to the downside, we have a bullish divergence, higher low on price, lower low on the yellow CVD. But then look what happened after. Price, yeah, okay, moved to the upside, but look at the CVD. It shot back to the upside, creating again lower highs on price, but then over here, lower high on price, but a higher high on the CVD. So lots of stuff going on locally, but what I would prefer to see, if we are going to get a bigger impulsive structure to the upside, and this is the low of a wave C, what I would love to see is then a move to the upside, then a retracement, create some bullish divergences with the low. That is what I would ideally, in an ideal scenario, would like to see. So then price retracing to the downside, creating some bullish CVD divergences, that would maybe support a more like zigzag structure in this for then more upside. But yeah, as it stands now, this feels better to me. Can't explain too well, you know. And if we then look at the medium time frame scenario that is matching the micro impulsive scenario to the downside, this is something to keep an eye on, where we're looking for a WXY scenario, where W is a zigzag then in an ABC. X can be any correction, with the highs over here taken for then the high of a potential wave X right on top of the 0.5, which is nice, something you like to see. And then in this wave Y, we could be looking for a potential expanding flat, with this move to the downside being a potential 5-wave structure on the micro, then a 3-wave correction, for then another 5-wave move to the downside, and then an A, B, C, where this wave C, I would like it, taking the lows, the double bottom over here, so wave C then takes the liquidity of the double bottom resting at 25.8k, for then a 3-wave structure to the upside for wave B, where I think this area is very interesting. We have the golden pocket over here, as well as some other confluences in this area, monthly, point of controls, weeklies, crazy stuff going on, for a nice resistance area, for then an impulsive move to the downside, where the most common target area for wave C is between the 1 and the 1.236, which is between 23.7k and 22.6k, and the 0.618 is also a target for a wave Y, which is at 25.4k, but maybe we already then hit that with a wave A. So this is like, you know, thinking ahead in time that, hey, if this is going to be a 5-wave move and price is going to go to the downside once more, then this is something that I'm going to keep my eye on. If we then finally end with the news, we have news today, so make sure you watch out, guys, because it can be very, very volatile. And the news is at 2:30 p.m. Central East European time. So make sure that around these hours, you are going to be trading very, very safe, because maybe volatility is going to kick in. We don't know to what direction. It can be up, it can be down, but all we know is trade safe around those hours. I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. Now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.